All right, moving on. Shares of Pinterest and Snap both struggling to gain back ground after last week's steep post-earnings fall. Some investors now wondering if these two companies can survive today's tough digital ad market against giants like Meta, Google, and Amazon. For more on this debate, we bring in Cameron Ansari, Headline venture partner and former head of corporate development at Pinterest. Cameron, it's always good to see you. So let's talk these two names, Cameron. Pinterest and Snap. Not a great start to the year for either one of those names. Some people may be asking, Cameron, listen, you look at these performances, can they actually survive as standalone companies? What do you think, Cameron?
Well, I mean, you guys talking about waste management, you're talking trash. It makes me think that we're, here in San Francisco, we're talking about innovation and tech, but, the simple businesses sometimes do the best. So, Snap and Pins have both been, under pressure in the last, several quarters. I think they're two very different companies. I mean, Snap at this point is a $4.5 billion top line business, a very sizable business, but not really growing. Snap has been flat the last year or so. If you look at their 2022 revenue versus 2023, essentially identical. And they're still losing quite a bit of money. I think they lost something like $1.3 billion for the year. Meanwhile, Pinterest is growing a little bit, more handsomely, about 10%. They did about $3.1 billion for the year in 2023. And they're starting to kind of eke out a profit now. I think they turned a minor profit in Q4, and for the year, we're about break even. So, I think they're different companies, but also very different use cases. I think Snap competes much more directly with TikTok and Instagram, which at this point are just so formidable. Whereas I think Pinterest itself has a little bit of a different swim lane in discovery and search and commerce. So hopefully they can kind of carve something out there that's unique for them. But I think both companies are going to have to figure out, are they large enough businesses to be viable standalone companies when you have these Goliaths like Meta and Alphabet and Amazon out there?
Well, what do you think? Will they be? I mean, let's take them one by one here. Are these going to be independent a year, 3 years, 5 years from now?
So when LinkedIn got bought, that was the last kind of business of this size in the kind of digital media, social media universe. That was bought by Microsoft in 2016 for about $26 billion. At the time, they're doing about $2.5 billion in revenue. Today, LinkedIn does about $15 billion in revenue, so it's almost 5x since the Microsoft acquisition, which is, I think, a blockbuster deal for Microsoft. Once that company got bought, it always said to me, at the time I was at Pinterest, if they're not large enough to be standalone, then, are we or Snap or these other companies big enough to be standalone? Because LinkedIn, we looked at as being, a very sizable asset. And, there is a sense that the bigger companies seem to be having more gravitational pull, kind of the Death Star kind of thing going on, where if you're an advertiser, you have $1 to spend, would you rather spend it on Meta or Google or Pins or Snapchat? And I think people tend to prefer to go to the kind of larger platforms with whom they've worked more, heavily in the past, and they just have larger audiences. So I think that's a trend that is definitely happening. I do think there's still a place, particularly for Pinterest, because I think I know that business a little better, and I think it does have its own kind of unique profile. Snapchat to me seems a little bit more vulnerable to potentially getting bought, and of course it was almost bought by Facebook, several years back for about $3 billion, which they turned down.
And Cameron, while I have you, listen, we got a market sell-off here. Got the NASDAQ down more than 2%. You know tech investing, Cameron. I'm interested to get your take. There's some viewers right now who will be thinking they saw that hot CPI print, Cameron, rates higher for longer, not good news for high multiple names. Is that how you see it, Cameron, or no? Is that sort of just short-term thinking? And, those with a longer-term horizon, you still want to be in these names as a kind of smart plays on that big, broad, secular AI trend?
I tend to agree with the latter. I mean, I think this is, in the short term, you're going to see choppiness for sure. And I think you saw a big run up the last few weeks and months. Last couple of days today, you're seeing a sell-off, 2% down on the NASDAQ. Obviously, Snap and Pins have been down significantly in the last week. And so you're going to see, I think, this kind of back and forth until the interest rates settle down, until the CPI settles down. But I think if you zoom out, 2, 3, 4, 5 years, technology and the innovation that's coming with AI, and just with the growth of these names, particularly in markets, you sit here in the US and you think these are such household names, but there's so much headroom for these companies overseas, particularly, Pinterest and Snapchat at this point, I think have 80% of the users outside the US. That I do think in the long term, you're going to have good growth in these assets, along with all the mega cap names as well. But in the short term, there's going to be some pain to follow, no question.
Yeah, it feels that way, especially on a day like today. Cameron Ansari, good to see you. Thanks so much.
All right, thanks. Take care.